The global economy is a mess. Everywhere you look, there's turmoil and uncertainty. That's not news to anyone. Inflation is high, and it seems to be getting worse. Interest rates are soaring, making borrowing more expensive. And the war in Ukraine keeps shaking things up. The conflict has far-reaching consequences affecting global supply chains and energy prices. We're facing a perfect storm of economic uncertainty. Markets are volatile, and financial stability feels like a distant dream. The average person feels it every day. Groceries are expensive, and the cost of living keeps rising. Gas prices are volatile, making it hard to budget. And that new car? Forget about it. Prices are through the roof, and many can't afford to buy. This is the reality of living in a turbulent economic time. People are struggling to make ends meet, and financial hardship is widespread. But even in chaos, there are opportunities. Savvy investors know that times of crisis can also be times of great potential. Smart investors can find ways to protect and even grow their wealth. Diversifying investments and staying informed are key strategies. It's all about understanding the risks and knowing where to look for safety. So buckle up and stay vigilant. We're about to navigate the choppy waters of the global economy together. With the right knowledge and strategies, we can weather the storm. The biggest player in the game is the Federal Reserve, aka the Fed. This institution holds immense power over the financial system, influencing not just the US economy, but the global market as well. They control the US dollar, the world's most important currency. The dollar's value impacts everything from international trade to the price of goods in your local store. To fight inflation, the Fed is raising interest rates. This is a critical move aimed at cooling down an overheated economy and curbing rising prices. It's like stepping on the economic brakes. By making borrowing more expensive, the Fed hopes to slow down economic activity just enough to bring inflation under control. Higher rates make borrowing more expensive. This affects everything from mortgages to business loans, making it costlier for consumers and companies to finance their spending. This slows down spending and hopefully brings prices down. When people and businesses spend less, demand for goods and services decreases, which can help to lower inflation. But it's a delicate balancing act. The Fed must be careful not to slow the economy too much, as this could lead to a recession. Too much braking and we crash into a recession. A recession can lead to job losses, lower incomes, and a host of other economic problems. So, where can investors find safety? One word: bonds. Specifically, US Treasury bonds. These are considered a very secure investment, especially in uncertain times. They're considered the safest investment in the world. US Treasury bonds are backed by the full faith and credit of the US government, making them a reliable choice. As interest rates rise, so do bond yields. This means that investors can earn higher returns on their investments in these bonds. That means higher returns for investors. In a volatile market, these higher yields can provide a much-needed boost to an investment portfolio. Think of them as the eye of the storm, a safe haven while the markets rage around them. In times of economic uncertainty, US Treasury bonds offer stability and peace of mind for investors. China, the world's second-largest economy, is facing its own problems. Their economy isn't growing as fast as it used to. This slowdown has global consequences. China is a manufacturing giant. They produce a huge chunk of the world's goods. A slowdown in China means less demand for raw materials, which impacts countries that export those materials. So, what's an investor to do? Don't put all your eggs in one basket. Geographical diversification is key. Spread your investments across different regions. Emerging markets can offer growth opportunities. Look for countries with strong economic fundamentals and less exposure to China's slowdown. Section 4. Trouble in Paradise. Europe is in a tough spot, facing a multitude of challenges that are testing its resilience. The ongoing war in Ukraine is hitting them hard, especially when it comes to energy prices. The conflict has disrupted supply chains and caused a significant spike in costs. The euro is weakening against the dollar, making imports more expensive and putting additional strain on the economy. This is bad news for consumers who are already feeling the pinch from rising prices. Their money doesn't go as far as it used to, making everyday expenses a burden. Inflation is eating away at their purchasing power, leaving them with less to spend. Businesses are struggling too, as costs rise and customers cut back. But there's a silver lining for savvy investors: high dividend stocks. These stocks can offer a way to mitigate some of the financial strain. These companies pay out a portion of their profits to shareholders, providing a reliable income stream. It's like getting paid to weather the storm, offering some financial relief during these turbulent times. Look for established companies with a history of consistent dividends. These firms are often more stable and can provide a sense of security. These payouts can provide a steady stream of income, even in uncertain times, helping to ease the financial burden and offer peace of mind. Section 5. Weathering the storm. The global economy is a complex beast, but even in uncertain times, there are ways to protect and grow your wealth. It's all about making smart choices. First, consider safe haven assets like U.S. Treasury bonds. They offer stability and can benefit from rising interest rates. Second, diversify geographically. Don't rely solely on one region for growth. Look for opportunities in emerging markets. Finally, explore high-dividend stocks. They can provide income and some protection from market volatility. Remember, investing is a marathon, not a sprint. Stay informed, stay disciplined, and you'll be well-positioned to weather whatever storms lie ahead.
Looking for the latest insights on finance, health, technology, and more? Welcome to AIRKBOT.com, where daily updates keep you ahead of the curve. From mastering your finances and staying healthy, to keeping up with the latest tech trends and avoiding scams, our blog covers it all. We provide deep dives, practical tips, and expert analysis. Each topic is carefully curated to give you actionable insights, all in one place. Visit AIRKBOT.com for in-depth analysis and subscribe to our YouTube channel for daily updates. Don't forget to like, comment, and share. Stay connected with us on Facebook, Instagram, TikTok, and more. Together, let's navigate the world's complexities with clarity and confidence.